This is our Forex blog for November 26, 2012, and the first step of our three-step easy Forex trading system is to use our currency meter, which is made up of multiple different statistical tools that measure both the percentage of currencies going up or down versus the rest, and also the intensity of those trends. And we also allow you to set your own weights for each of these individual tools, and we now also have a daily, weekly, monthly weighting in here. The monthly trend I only give 4% weighting, weekly trend 13%, and daily 18%. So 2/3 of this is our very fast statistical tools that measure, like I said, both the direction and the intensity of the direction. And basically, to make it as simple as possible, you want to buy the strongest currencies versus the weak. And if, with the case with the euro is on top of all the other pairs on here. If the euro is strong, you want to buy that versus the weakest pair. If the weakest pair is on top, such as the pound versus the yen, you'd want to sell the pound yen if the pound's weak and the yen's strong, that is. So this is the first step of our three-step easy system. You can see pretty much the yen is for the most part strong all day, as is the dollar, until a little bit later in the day it starts having weakness. So from 4 to about 2 o'clock US time, which ones are the weakest? Well, the CAD is very weak, the pound off and on, the New Zealand is weak, and basically the pattern you kind of want to look for in a currency meter to anticipate, and that's what this is used for. You don't wait for it to get -80 weakness, which is incredibly weak. You can see it had incredible weakness before, and then during the counter trend move, currencies don't go up or down forever. Typically they go down, up a little bit, down more, up just a tiny bit, down a lot more, and vice versa. So when you see a lot of weakness, followed by a half an hour to an hour and a half of very low strength or less strength than there was weakness, you want to anticipate the weakness coming back. So, after about this amount of time right here, let's say 9:15, we're anticipating the New Zealand going weak again. Which one is strong? The Swiss is pretty strong, the euro is strong, and also the dollar's very strong at that time, right? So let's bring up the New Zealand dollar. We're looking for sells. I was going to briefly bring up some of these charts. Today was a very low volatility day for the most part, but earlier in the day when you're looking to find sells, basically at 9:15 is right here. It had a little bit of a pullback. There's two main methods that we look for our entries. One is a pullback trade like this, where it goes, and I usually look for at least 15 to 20 pips. So here's the low at 82.17. It only pulled up to 13. This is only a 13 pip pullback. So for me myself, I would not take this trade, but conceptually this is what we do. We look for pullback trade. We go short when it goes underneath the lows. We put our stop a few pips over the high, and you can see this one kind of started our way, went against us, and then came back down. Very low volatility day for the most part. The euro and the Swiss were strong also. So euro New Zealand is one that you want to buy. Again, very low volatility day. You can see this pullback, it was only about 10 or 12 pips, but it did go our way. Let's bring up the New Zealand Swiss. We're looking to sell this one. 9:15. Notice the pullback, and the trend continues. Again, very low volatility day today, with the exception of the pretty explosive move that just happened a few minutes ago before I did my blog video. You can see the dollar, which was relatively strong most of the day, for the couple hours preceding, did not have quite that much strength, and you can see it was falling off. Anytime a currency goes up or down, usually from 5 to 12 hours, and this is, you can count it pretty much from here, 1, 2, 3, 4, 5. At 5 hours up, it's kind of running out of steam. It's safe to assume a nice counter trend move here. The euro was extremely strong earlier, as was the Swiss, and so basically when you see the weakness start to come in here with the dollar, and even if you missed the first move, what's nice about our software is our signals, when they find a big move, show you where a safe pullback buy is. So this euro got really strong here, the dollar got really weak. I want to buy the euro dollar on a pullback. the dollar Swiss is going down. If it goes up a little bit and then starts going down, you want to sell the dollar Swiss. Okay, so here's the euro dollar, and it was pretty choppy most of the day. But even on a choppy day like this, you can see that we found the winning trade here. The counter trend signal found the high, and it pulled back. This buy trade here failed, but the next buy worked. This counter trend trade here worked. This buy signal here. And typically when it breaks from above to below the hourly, that's a low probability trade. If you're watching for this, you might want to wait for a breakout of the previous bar's high before you go long, just to avoid that loss. Comes down again, this buy here works, this sell here works, this buy works, this one here fails, it goes sideways. You might have got out of this trade near break even as it went sideways for 30 minutes or so. Typically I have a time stop of about 25-30 minutes. If it doesn't go my way, or if it goes a little bit against me, when it comes back down and it's not looking like it's going to go lower, I get out. This counter trend trade here worked, this one worked, this one worked, and when you see an explosive move up here, our software is not going to catch every little pullback trade, and I personally prefer 3 to 5 bar pullbacks. This is only a 2 bar pullback, and then it resumes its trend. When you see that it's strong as it's been all day, you might want to buy it when it goes 1 pip above that first green bar's high right here. Put your stop underneath it. Be very quick to move your stop to break even. You always want to draw your fibs off the last little wave to get an idea where to get out. Good place to get out. And notice anytime our counter trend signals are super high probability, they're bigger than the other ones. And you can see lower probability ones are smaller than some of the other counter trend. And when they're very likely to be a reversal, we color code them green for buys and red, as you can see here, for sells. So if you took that trade here and you're watching this break out of the high, it went up about 15 pips, you go short, it fell about 20 pips, you buy here, it goes up 12-15 pips, and it also nailed the high right there. So even on a choppy day like this, and forgetting the biggest moves of the day which just happened, you can see our signals are pretty accurate. Sell, sell, that one, failure, win, win, failed, win, win, or break even, win, failure, win, win. You know, on a choppy day like this, that's pretty impressive. And you should see how our FX trade signals work on trend days, where markets, you know, take off and go 20 to 50 pips. They pull back and then they continue 20, 30, 40 pips. You should see how well our signals work on days like that. But they're extremely accurate and good to trade even on choppy days. And what I do is, if I have a loss, and typically I will watch a pullback, I will always draw my fibs on a move, and I like to buy personally at the 50%. This is only a 38% pullback. It's only a 39 pip move up. Any move, I'd say 45-50 pips or more, I might consider buying a 38% pullback, but this is just not much of a pullback. So when you get a pullback to the 50% of the buy signal, that's a much higher probability. And of course, the trend was up today. If you see this nice little pullback right here on this wave, you draw your fibs on there, the fib targets down here are pretty high probability. And again, this one touched this fib area. If you wanted to, when it hit this, scale in from here to here, you could do so progressively, and then when you get this pop right here, you made about 15 pips on a pretty big position. And when it pulls back down again and can't go underneath the 1.382, it's a very high probability. It also happens to be the value area high of last week. The point of control is where most trading activity happened last week, and 68% of the activity of last week is between the value area high and low. This is a value area high, which means the market ended the week up, you know, near the extreme highs, and when it pulls back, it's very likely to find support here at this value area high. And that's why if you click on the chart, you'll see a weekly value area up, miscellaneous buy. There's a lot of different patterns I look for. This one here is weekly value area buy. And you can see some of the best trades of the day are this one and this one. This one went from around 50 all the way up to 80. It's a 30 pip move. You might have got out of the trade here when there's a counter trend trade. And I always kind of time this based on what I think the longer term trend is doing. If you look at, for example, a euro-dollar daily chart, show you fibs on that, you can see It pulled back after a big explosive move up, kind of had a double top there, and it pulled back, found support at the 38% retracement, and then it's kind of been working its way up, and it went sideways, in this pullback until it really goes below the previous day's low. The trend is up, so looking to buy pullbacks, especially deep pullbacks near the lows of the day, it's a pretty high probability trading method based on the daily chart. So anytime you trade, you should definitely use multiple time frames to confirm the longer term trends and focus on, obviously in the Eurodollar today, buys. Obviously the dollar Swiss is in a downtrend, and so we are looking to preferably find sells in this one. So as you can see on this was a pretty choppy, very boring trading day for the dollar Swiss. 3 times up to the highs, the previous day's highs, can't break them, fails there every time. Putting trends on your chart is always a good idea, especially when you have multiple areas that are very close. This low here, very close here, very close here. And when it breaks out with any kind of confirmation from a trend line, for instance right here, extreme weakness, it finally broke the trend line. A lot of times trend lines get broken, comes back up, can't get above it. If you do a tiny position here short when it breaks, and then when it's confirmed it's not able to go back above it, when it breaks this area here, you can add to your position. Let's say you did 1 lot here, 1 lot here. Your average position is pretty much the same, and you are looking for the next area of support, the lower containment bands, as a possible profit target. You can also draw your fibs on this, and usually somewhere between the first and second fib target it's going to get hit. I'm sorry, I drew that wrong here. Let me put that up here. There we go. And you can see it went slightly below the 1.618. Usually, probably 75–80% of the time, the 1.618 is the maximum profit you're going to get. But fib targets off of only tiny 20 pip moves are very insignificant. So you might want to, at the very minimum, redraw that down here near the new low. That's only 22 pips. But you can see it did find support at the 1.618, which is typically what happens. Rarely, and this is such a tiny move, it was such a low volatility day before that explosive move, the 2.0 probably 90% of the time is the maximum profit. So if you're looking at this and you get out of your trade here, you have another sell right here. This is an excellent profit target. Our counter trend buy signal gave a buy down here. Typically when it's underneath the lower containment bands, I tend to scale into trades. I might, for instance, buy 1 lot. If it goes 10–15 pips down, buy 2 or 3 lots, and then another 10–15 pips, especially if it's at a major support level, or if I think it's at the likely max low of the day, I will do 5 or 6 more lots. I will scale into 15–20 full standard lots on trades, and then by doing it progressively, typically it only has to move 6, usually worst case scenario 12 pips my direction to get out of break even. And if it continues or I see some momentum coming in, I'll hang with it. If I get a sell signal after scaling into a buy trade, I get out of the whole thing. One last thing to do on a daily chart is to draw your fibs off of previous moves to get an idea of where the possible low would be. So if, looking at this chart, I would say probably 92.31 would be the max low today. If it would have, so I would have used that as my ultimate scaling level where I would be adding the biggest position of my trade. Another thing you can do is look at 30-minute charts or hourly or 4 hours and draw trend lines, and they're absolutely excellent at giving you a likely maximum low of the day. And these are also great ways of getting and knowing your profit target ahead of time. Let's just draw a trend line off the bar's highs. And I'll tend to ignore a little false burst like that. Try to hit as many points as possible. Right click on your chart, duplicate it, and then project it off of the low. And you can see, obviously Friday it went underneath that, but today it came down there pretty much to 92.61. That's likely to be the low, and so 92.61 is a very good place at and below to be doing counter trend. And this big buy signal underneath that trend line from the other chart confirms it, and you got a nice little 14–15 pip bounce there. if you miss the trend trade down, you can ride it up. And getting just 10 pips per day will double your count every 2 months. So especially if you scale in progressively into a super huge position, get 10, 20 pips, you can make an entire week and sometimes 2 weeks worth of minimums on one trade.